Good morning everybody, and this is your DAX day trade setup for today. So we did get a green bar, which is interesting on the daily, but it is an inside green bar, so didn't really close much above the previous day's high, and the previous day was a fairly strong green bar. 14,000 is still the area where the sellers are stepping in. This sideways action pretty much going to continue as far as I'm concerned. We're going to need a clear break of 1400 and a clear retest of it before I even think of getting into any long-term trades on this pair. So in other words, there is no direction right now. So at the moment, if you look at the 3 hour, we have crossed up above sort of 1400. So this 1425 is the area that I'm watching. We've come back to test it at the close. Now, if I look at where we are on the futures market right now, we are slightly stronger, 0.4% up, and that is sitting at 14,081. So fairly strong. Does it mean I need to start looking for longs? No. Does it mean that we are top of range? Possibly, yes. Look at my oscillators. Okay, no diversions, anything to worry about right now, but we do have a grouping above the 80, which is clearly overbought territory. So we do have a channel, and I keep saying this often, the DAX loves channels. So there's our channel. So if the channel breaks, then what you typically find is it starts forming a bit of structure and it forms a channel to the downside. So you can see there's another channel, there's a 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 channel. So the DAX loves trading in channels. So just keep that in the back of your mind always when you look at the DAX charts. So look at what we see right now on the hour. We have a clear break above the moving averages. What I'm looking for is a retest of the 155 EMA. Remember, I use the 155 EMA as my signal for what trend we are on whatever time frame we are on. So when we're above the 155 and we've got a crossover like that, that just indicates that's a strong trend, and I'm looking for a strong trend to the upside. Converse is true, obviously, to the downside. So at the moment, we have a crossover of the lower moving averages, and we're above the 155 EMA on the 1 hour. So this is it is currently an uptrend. The question is whether it is going to be a trend that's going to continue, or alternatively, is it going to fizzle out like it has every other time. So normally what happens when you're trading these things is you tend to look at an area which has been defended for so often, which is 1400, and you're immediately looking to sell. And the problem with that mentality is that the bulls on the other side are looking for that kind of structure. They're looking for you to have your shorts in, and obviously you're going to have your stops at predefined areas, and they're going to target those areas, because the minute they hit those stops, it's going to accelerate and sort of put on a bit of a short squeeze to the upside. Obviously the converse is true to the downside as well. You know, when you're expecting the market to move up and then the bears attack that area, setting a trap for you. So at the moment, my advice is quite simple: get down to the lower time frames, and you'll see it's great advice, because if you're down in the low time frames, you're obviously going to get opportunities. However, it is going to be volatile and it's going to stress you out. So especially this scenario here, you can see we sort of came back onto this area here. So in the pre-market it's kind of difficult, that first hour of trading, because there's nothing really happening. So you can see what we're 15 minutes, so there's the first hour of trading. Then you have the acceleration. You're looking for a pullback here, you get the pullback, you buy into it, and then the sellers move down. So typically that first 2 hours is always that volatile. You can see here as well, a little bit more than the first 2 hours before trending. The day before, the first 2 hours up to the area, and then we just go sideways after that. That first 2 hours is where you can make your money, but as yesterday you can see, it would have stressed you out immensely. All you want to be doing is going with the trend. So if the trend is up, you want to be buying as low as possible and selling off resistance when you get on the 15-minute chart. So your resistance is going to have to come off your 3 hour or your 1 hour. It doesn't really matter, one of those two. but you're looking to buy into this. If I drop down to the 5 minute and we look at the price action of yesterday in the beginning, can you see how it would have stressed you out? But at the same time, there's your, not really a decent signal there. You have a bit of a gap down here as well. And you've got very gappy. When it's gappy like this, it's an indication of it being sort of all over the place. So, yeah, I mean, that's a triple bottom on a moving average on the 155. So for me, the only real signal here was the structure here. So you could see we kind of try to reject it. We've got a hanging man, well, not quite a hanging man. You know what you call that? It's kind of, so when you see the converse hanging man on the upside like that, it's always an indication that there's a potential move down, and you look for the confirmation, and that's what we've got here. So let's just say when you see that kind of pattern, so it's a solid red body, and then you've got a sort of a pin bar, reverse pin bar here. Often you'd think, okay, if it breaks below here, that is a short, and a stop above that bar. When you get this kind of bullish bar, which opens on its low, closes on its high, that's a solid bullish bar. You're long on top of it, and your stop is below here. Now, by doing that on the 5 minute, you can see that's a 38 point risk, and you could have let that run. I mean, this trended until we started going into this range, and what you'd be able to do is put your stop below the range. That would have been, or even taken profit at this bar here. So that would have been 75 point gain to 37. So almost a 2-to-1 trade. Okay. But then you can see from there on, so from lunchtime Europe, we sort of just move sideways, or pre-lunchtime Europe, basically. We move sideways until the USA opens, and then we kind of go nowhere. Unless there's some really good momentum on the US side, then we'll follow that. But typically by then I've switched across to the US market. So for me today, I think there's a lot of noise in the market, and there's a lot of indications from the Asian markets at the moment, which is fairly interesting. So, you know, oil is slightly up as well. We do have not much happening on the euro at the moment, so that's something we're waiting for. But there is a bit of noise in the market. So I would expect us to get some kind of opportunity. It could break away. That's the other thing that I am very wary of, because if you look at this trend, or look at this range, you can see we are kind of above it. So there is possibility that we just have a breakaway, and we have a strong day as all the shorts get squeezed out. But I'm on the fence. So I think that's pretty much what the story is. Kind of difficult to get you guys trades when the markets are this sideways. But anyway, so my advice is quite simple. Get down to lower time frames, watch them, and look for the trades. I'll see if I can get some of those signals onto Telegram if I do find some of the 15 or 5 minute trades, and then I'll just highlight them at that time frame as well, so that you can see what I'm talking about. But anyway, at the moment on the hour, it is wait and see until we get structure. Okay, it does look like we're getting some structure, but I want to see us defend this 14,000 area properly. If we can defend and bounce off it properly, then I will start picking up trades on the hour, waiting for, sort of staying on the market a bit longer than what I normally would. But at the moment, we're looking for probably the 5 or 15 minute charts, and we're looking for opportunities there. Okay, anyway guys, that's my waffle for the day. I hope it helps you somewhat, and we'll catch up with you tomorrow morning. Cheers for now.